Today, we're going to dive into the market madness. We're going to look at some of my recent trades. We're going to get an idea of the market overview, and we're going to plan the next coming days. Essentially, we're going to plan the next week. Let's get into it. Well, the current fair price of Bitcoin stands at an impressive 54,391, which is crazy. That is ridiculous. Is Bitcoin going all the way to the all-time high, or are there any obstacles along the way that's going to divert this rally up? We've seen a crazy move up over the last 24 hours, 16 hours. We've seen over a 6.8% rally up, which is amazing. Okay, so what's the market mood at the moment? It's quite volatile, and we're about to see what comes next. Like I always say, it's important to plan your trades and trade your plan. We're not gambling here. We are planning our trades adequately and we're executing with precision. Okay, so let's start things off with looking at some of our recent trades. Let's start things up. Trade number one. So we've got an internal high rotation. Now, trade number one was a trade that was given in this channel on Friday. So on Friday over here, we had the trade setup. Okay, and I was just saying, well, we're looking to rotate from this range, but we're looking for our confirmations. We're making sure that we're looking to see our change in market structure, and we're looking to market cipher to do what it does. Okay, this was also given in the Discord channel, so you can see here, as of Friday, this was the trade setup we were looking at. Right now, this trade was given on a platter, literally. Now, why was this a good one, and how could we have entered this trade effectively? Well, first thing we were looking at, we said, where is our POI? What we're going to do is we're going to use the bar replay tool. We're going to rewind to Friday, and we're just going to roll it back and go through exactly what happened. So we were around here, and we said, first things first, where is our POI? We were looking at the bottom of this range. This whole thing is a range, of course, and we're in the bottom, the discount region of our range. And we were saying that we've got this 3-minute demand zone. Now, this 3-minute demand zone was between 50,583 to 50,881. Now, where does this demand zone come from? This demand zone came from this Wyckoff accumulation model tool that we had on Wednesday. We said we're in the discount region of our range. We said we've got a nice, buy side liquidity generating over here. We can see all this liquidity, this trend line of liquidity generating over here. What else did we say? Well, we said we're waiting for our confirmations. What are our confirmations? Confirmation number one, clear market structure change. We need to go from printing lower lows and lower highs to higher lows and higher highs. Okay, so we need that clear market structure change, and we're looking for a bullish divergence on market cipher. So let's see whether we got that. What does our market structure look like? If you say, let's look at the 10-minute or the 12-minute, our market structure looks like this. We've got a low, we've got a high, we've got a low, we've got a high, low, we've got a high. I could take that. I'm just going to take this. We've got a high, we've got a low. So that's what our market structure looks like so far. So at the moment, we cannot, will not, and shall not enter a trade until we get a break of that high. Okay? Until we get a break of that high, we should not be looking to enter a trade. That's what I preach here all the time. So let's see what happens. The price flirts around and then it makes another low. So it takes out that previous low. That means we have more market structure. So that means we have just formed another high and another low. So we can bring this down over here. Now this is the new area for us to break in order for us to enter this trade. So we'll carry on. Let's see what's going to happen. So price starts to rally up. Is it going to break that level? We're watching. We're watching to see whether price is going to break that level. And we're also watching to see how price breaks that level. All right. Does it blast through, or does it just, have a tiny close above that level? Let's see. Right. So price is doing something really annoying. What's it doing? It's kind of forming this range very close to that, breaking point, which is, you can take it both ways. It could be potentially a, distribution, a little distribution in order to go down, because we've been going down, of course. But it could also be just building up some liquidity for us to blast off. All right. So we can see we formed this tiny range over here, all right? And I'm sure lots of traders were thinking, this is not the break of structure that I wanted. I wanted more of a blast off so I can enter on that retracement leg. Remember the retracement leg? We said we're watching this region with these big eyes for our retracement leg, a break in structure, and then a retracement leg at our zone. All right, so let's see exactly what we got. Bang! So we got that blast off. So it turns out it was building liquidity in order for us to blast off. Now this blast off was aggressive. Now look at that. Look at all the fair value gaps between these bars. These are what we call, aggressive bull trend bars that simply just blasted off, and we can see it blasted off right to this value area high, which we're going to talk about in a second. But this blast off was remarkable. Now, you're probably thinking, well, that's too aggressive. I probably can't get a trade there. I can't get a trade. There's no way I could have entered that trade. And that's fine. That's fine. You're not going to get every single trade, but you have to remember, after every breakout of any range, what are you expecting? You're expecting a retracement. Now, that retracement is expected to come back into our old demand range. All right? And we can see that. We can see that's happened previously in the past. Let's see what Bitcoin has been doing. Okay, so we had our range, we had our blast off. Guess what? We're coming back into this old demand range. What happened over here? We had our range, we had our blast off, we came back into this old demand range, okay? So this is just how Bitcoin moves. So the more and more you understand the nature of market structure and the nature of Bitcoin, the better you will be at predicting these levels. So let's see, what are we expecting? We are expecting price to come back down to this zone. Now, where is our zone? Our zone is everything in this region, from our high to our low. This entire region is our zone. So we are expecting price to come back down to that region. So let's see what price did. But before we do that, we can see that price actually starts to form another range. So it starts to form another range, okay? Then it breaks structure up, okay? And I do want to pause it here. Why do I want to pause it here? Because there are a few scalps we should have taken. We could have taken, okay? So we haven't quite finished trade number 1 yet, but I'm going to talk to you about trade number 2 because we're right on point. So trade number 2 was a short from the distribution model 2. Wyckoff distribution model 2. Now what does that look like? Well, we've got our tap number 1 over here. We've got our tap number 2 over here. And we've got our tap number 3 over here. Now what did that do? That basically gave us the fuel to mark down, okay? And shortly after we marked down, guess what's happened? We tested that old range we were talking about, all right? And then after we tested that old range, we marked up, okay? So that's exactly what's happened. So you could have entered a scalp here on Sunday, but I wasn't trading over the weekend, so I'm sure some of you would have caught that. So as you can see, we marked down, so we don't actually quite get to that old range, all right? So we don't actually get to that old range, but let's see whether we do so later. Let's see whether we come back to it. Okay, so we're still waiting, we haven't quite come back to that range. I'm just gonna extend it over here because this is our old range. And bang, all right? We come straight into that old range. And some of you might be thinking, well, hey, listen, this range is massive. How are you telling me to enter a trade from a range from 50,575 all the way to 50,199? That is ridiculous. That risk to reward is abysmal, all right? But in that case, what you need to also consider is that you have this mini range that you set, okay? This mini demand range. And that's exactly what price came back for. Price came back for this mini demand range, wicked into it, all right, and had that bounce off of it. Now that bounce we're about to see. So what does that mean? Well, if you use Market Cipher to enter the trade here, great, you could have entered the trade right around here. But if you were patient and if you were waiting, you would have probably entered your trade right around here, okay? So you could have entered your trade as soon as you entered that zone. So let's play and let's see what price did. Okay, so look at that, all right? So we've literally come back into that zone and we've mooned it. We've completely taken off and we've gone above, 5-6%, which is remarkable, all right? But let's also see now, what else did price tell us? If you weren't watching market structure, and if you weren't patiently waiting for price to come back to that zone, all right, how could you have entered this trade? Well, even with this trade, Market Cipher showed you what was going on. If you look on the 45 minutes, we have a very clear as day hidden. We have a very clear as day hidden bullish divergence. All right, and what does that look like? Remember, hidden bullish divergence is when price goes up and our momentum goes down. So let's find where price is going up. Look, we've got this low to this low. We've got this trend line of price going up, and let's find our momentum waves going down. Look, we've got this low momentum wave and we've got this low momentum wave going down. So that is what is known as a hidden bullish divergence. And usually, especially with Bitcoin, that is a very, 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 very aggressive indication that your range is coming to an end and you're about to blast off. So really and truly, what's happened is we've accumulated, or really and truly, we've reaccumulated in this region, and then we've blasted off as a result. Okay? So that's sort of where the trade left us over the last few days and over the weekend. But where does that leave us now? What is Bitcoin doing? Where is it going? We can see on the 1 hour that if we go back to our current market structure, we can see on the 1 hour that Bitcoin has been printing nothing but these bull trend bars. I'm going to get rid of all of this because we don't need this at the moment. Kind of broken out of this range now, so we can get rid of this just to make this nice and clear for us, so we can really understand and see what's going on. Okay, so Bitcoin has obviously broken out of this range, and it's done so quite aggressively. This was a nice trade, boy. Now, if you enter that one, you would have been able to get you're looking at a nice 7 to 8 risk to reward. So you'd have made at least 7 to 8% on your account, which is quite good for about 16 hours play. Okay, but anyways, so what is Bitcoin doing next? Is it going to those all-time highs? That's what we're about to decipher now. First things first, let's take a broader look at what's happening. So what's happening in terms of market structure? Get rid of those big eyeballs. All right, in terms of market structure, let's look at, historically what Bitcoin has done. It's printed a high, last bull market, it's printed a low, it's printed another high, and then it's broken market structure bearish. Okay, where is that break of structure? That break of structure is right there. It's broken bearish. What do we expect after a bearish break in structure? A retracement, similar to what we expect after a bullish break in structure, a retracement. If we were to flip this chart, we would see if this was a bullish chart, we would have broken structure here, and we'll be looking at that retracement leg. Okay, well, let's go back. All right, now that retracement leg, this is a fairly deep retracement. We are saying, and I've been preaching this for the last 4 or 5 weeks, we are saying that we need to brace ourselves for that monthly lower high. What do I mean by that? Well, this is our previous high. This would be our monthly lower high. And we need to brace ourselves for where that is going to occur. We're not sure where it's going to occur, but millions and millions and millions of traders are trying to find out exactly where that shift is going to take place. Where are we going to change market structure from bullish to bearish? Now, where is that going to occur? Because if you can predict that, you're in for a very nice swing trade all the way down. All right, so that's what we've been talking about. Now, considering the look of these bars on the monthly, these bars are looking very, very bullish. Bull trend bar, bull trend bar, bull trend bar. And then we have what looks like a doji over here. Okay, a bit of indecision, range. And then we have another really aggressive bull trend bar. This seems like Bitcoin does not want to stop. Okay, it does not want to stop. Now, there is a possibility that we actually break market structure, we pass the all-time highs, and we break out. There is that possibility. There is also the possibility that we get to the high, all right, we wick it, we make the third tap. So first tap, second tap, third tap, and then we die off. There is that possibility. But, a more probable play, based on market structure, is still that retracement leg, before we get to those highs. Now, where potentially could that retracement take place? Remember, as I've been preaching for the last 5-6 weeks, for that retracement to take place, we need a transition in market structure, starting from the hourly, from the 4-hour to the daily to the weekly, all the way up, in order to get that transition from bullish market structure to bearish market structure. Remember what I say market structure is very, very, very similar to a slope, a ski slope. If you imagine a ski slope like this, all right, and you're skiing, as you're skiing up here, we've got positive gradient, positive gradient, positive gradient, positive gradient, and then we tether up, and then we have negative gradient, negative gradient, negative gradient, negative gradient. This is what I mean by a transition in market structure. You would not, enter a slope or look to go enter a slope here. Why? Because the graph is still pointing up. Okay, so when we say traditional market structure, we want to see it going from higher highs and higher lows to break structure to print lower highs and lower lows. Okay, the breaking structure being there. So that's exactly what we are looking out for. Now, where is that break going to occur? Well, we've only got a few obstacles left. Bitcoin has broken through most of our obstacles. A lot of us thought this was going to happen at that fib retracement level. A lot of us thought, well, if we pull out the fib from the high to the low, okay, and we edit this to have a more clear fib structure. Let's use this one and let's edit it. Let's make it thick. All right, let's put it as times 4. All right. A lot of us thought this was going to be our retracement. We're going to retrace at this level. We haven't. We've broken through that level. But there are levels above us. There are obstacles above us. And what's the next obstacle above us? The next obstacle is at this 57. Well, the next major obstacle is at 57, 242. Now, it just so happens that level is also confluent with a 12-hour zone that we have. Now look at this 12-hour zone. We can see we have a 12-hour zone from here extended across that is marrying up nicely with our level. Now we've obviously, I'm going to get rid of this for now. We've obviously blasted through a lot of the obstacles we thought was going to work, and at the moment, it's looking very bullish. It's looking exceptionally bullish, I would say. So let's look out for this level to see whether it holds. And let's also look out for this level here. We have a 30-minute supply in between to see whether it holds. So what am I going to do? I'm going to set an alert there, add alert. And I'm also going to set another alert at my 12-hour zone to see whether that holds. Okay, so those are the two zones I'm looking for. What am I looking for price to do at those zones? Am I just going to jump into a trade as soon as it tags it? Well, it's about to tag this zone now. We may get a reaction. Let's see. Am I going to just enter a limit order? No, I'm not. I'm going to wait for clear market structure change, for price to go up, printing higher highs and higher lows, change in market structure, and then I'm going to look to enter at that retracement leg. And what you're going to see is that is going to marry up nicely, very, very nicely, with market cipher printing a bearish divergence. So I'm looking for this exact event in each and every one of these levels. All right. Now, I would not recommend you enter in your first entry. What do I mean by that? Look, as price is going up, I would not recommend you enter at the first entry. No. Do not do that. That is risky behavior. Okay. Because what's to say price is not just going to continue blasting off? What I would recommend is let price set that first high. Okay, so let's say this is our level. Let price set that first high. Now let price come back down, let it play around. Okay, and perhaps you can look to enter on the second entry when it looks to take out that initial high. That would be a higher probability trade with higher predictive value. Excuse my drawing over here. It's not it's not the most aesthetic, but we move. All right, so there we have it. We're looking at the two levels above us to see if we get a reaction there, and if we do, we're entering that trade based off of market structure. Obviously, we can use this as a demand zone for a long. All right, well, there we have it. I'll see you tomorrow.